Where do we want the face cam? Here? Here? This looks weird. This feels weird. Here? Or here? Hold up. My nose looks bigger from here. Or here. Okay. Anyways, this trade is not yet done. We're going through it, but I want to recap it with you guys. I'm currently 60-40, 60% probability that we will get stopped out, 40% that will continue pushing to the downside. I'll explain everything and why. But this is our trade recap, so enjoy. Price action, market open on the Nasdaq, liquidated to the downside, showcasing a market structure shift. Took out our first draw on liquidity, this sell side liquidity right there. Upon taking out the sell side liquidity, this is how the 4-hour looked. So you guys can see we had a very strong displacement to the downside on the 4-hour time frame, invalidating this bullish imbalance. Oh, I didn't even realize we also created a massive inverse 4-hour fair value gap. This push to the downside was caused by yesterday's prior move of liquidation. Unfortunately, Actually, I don't really care that we didn't get filled, but we didn't get filled on the sells to the downside. Seen hourly fail to displace higher. That was perfect confluence that we changed market structure back to the downside. Try to get an entry in, did not see an entry that followed within any of our 2 playbooks, because for anybody that watched the how to create a strategy, how to create a playbook video, you would have seen we implemented a new playbook with inverse fair value gaps. Didn't have any of that here, unfortunately. Price absolutely liquidated the bed, diddled to the downside. Upon getting diddled, this is the price action we ended up forming for the rest of the day, consolidating, blah, blah, blah. 4-hour during London, came up, retraced into this massive 4-hour imbalance, pushed the downside, and now here we are. So, Lonnie, how'd you end up getting into the trade? You know, explain the trade. That's why we're here. Relax. You guys need some context. Goofy goober. Anyways, price action came down, took out our sell side liquidity, showcased a market structure shift back to the upside. Upon seeing this market structure shift, we emphasized this 5-minute imbalance right here. Upon seeing this 5-minute imbalance, we had 2 choices. First choice, don't trade for the day and just continue to see how price action develops. Or, well, we actually had 3. Look for sells, or look for buys, or look for shorts, or look for longs at this 5-minute imbalance and at this 5-minute bearish imbalance. So what ended up happening, we retraced, validated pretty strongly this bearish 5-minute imbalance, had a strong displacement to the downside. This was not the displacement we were looking to find our execution upon, but instead this one right here formed a 5-minute imbalance, which we ended up getting tagged into perfectly to the tick. You can see right there, that wick right here got tagged in at the equilibrium of the 5-minute and the 1-minute imbalance, as well as that also having retraced for the inverse 5-minute fair value gap. So now we're throwing in our inverse. Price came up, chop, thinking we're going to get stopped out here for a while. Price didn't. Push back to the downside, still thinking we're going to get stopped out. Mainly because it's pretty late in the day. Well, it is New York lunch break, but it's pretty late in the day. Don't think we're going to push back down to the low of day today. And if we do make any push to the downside, I think it'll probably be around this range. In order for us to continue to the downside, we will need to displace below these 5-minute lows. We have been failing to. We have this 5-minute fair value gap right here we need to validate, and we do still have bearish confluence. You may ask now, Lonnie, why would we continue back to the upside? Well, not only did we sweep out liquidity, we have this 15-minute imbalance. We have been validating bullish for a while, so it's definitely possible if we begin to displace higher on the 5-minute, we will see that push back to the upside. I was thinking of adjusting my stops, putting it right above here, but I'm going to allow the trade to fully play out. Maybe I will, maybe I won't. We're going to see what price action wants to do. I think at this point, if price continues to cross higher, that is a solid confluence that, you know, trade ideas done. However, we do still have that inverse fair value gap, so we want to allow our trades to fully play out. We do have a validating stop loss, so if we do get stopped out, that will be the confluence that, hey, this market structure shift to the downside was not valid. Your trade idea got invalidated. That's that. Already did our trade recap. If you want to pause and read through this. Oh, there's a squirrel at my, oh my gosh, there's a squirrel at my, oh my gosh, look at this, wait. Squirrel. Oh no, he's climbing up the building. No! He was at my window. My window was wide open. He almost walked in. No! I wanted to get him on video so bad. No! Should I go chase him? Okay. Might as well start barking now. If you wanna pause and read, I can't zoom in. No, he's actually gone. That's so tragic. I thought that was a fat rat. I'm 2 stories up. I'd be like, how did you... Oh, anyways. You can pause and read right here. Zoom in if you need. But there you go. This is how our top step is looking. We are risking pretty heavy on this. We're literally risking half the account. We have 2 accounts. This is 300k in challenges. So have around 2 challenges till we blow, and then we got a lot of challenges. I got fed up with going to work, and so you know what I decided to do? Decided to get a bunch of challenges and full port them on A+ setups. Yeah. We have we're going to have a lot of challenges because and don't worry, our risk management's not going to be like this on any funded account. We learned our lesson from last year. For anybody that doesn't know, last year I was risking 3% per trade. That's why I was making so much money. I was risking a lot of money. 3% on a 200k account, I was literally risking $6 grand a trade. Shout out TFT when they existed, man. Thanks for the payouts, and then the payouts that never showed up because they shut down, and then had to go to the bank. Everybody fought to take legal action, but TFT is a different entity. Something about blah blah blah. They just TFT. Anyways, Angelo, Kamala Harris. And then this is our trade reflection. Something I want to mention is emotion. We were not emotional about this trade, but whenever you execute it on the trade, you're like, so are we gonna push the downside or not? I typically have that when taking the first trade on challenges, and so I knew that was gonna happen either way. That's why I wanted to make sure this was an A+ setup following our playbook. So no matter what the case is, we followed our rules, followed our game plan, everything played out perfectly, and we can continue to go in and execute properly how we know we should. When you can't fully negate emotion. You will never fully be able to remove emotion out of your trading. Understand that. You're going to have times where you may be the individual when you first get funded. You have bad psychology on your first trade because you're focused on the profits, and maybe you throw out your game plan. Whatever the case is, everybody's different with how they trade. For me, I know whenever I take my first trade on any funded account or challenge, it's better for me, specifically the funded account, it's better for me to de-risk heavily, or at least by half of my normal risk, because I know my psychology will be in the state to where it's focusing on the profit for a second rather than the trading. But nonetheless, me going in and acknowledging that, it allows us to continue to stay focused on what we are improving at, which is our following our trading game plan and trading playbook. There you go. It's as simple as that. Following our rules continuously, repeating and rinsing these same probable actions every single day. And guess what? You do that enough times, you will win. So, better go in, continue to... I'm not going to update you guys on the trade because it's the end of the video, and I want to end it before 10 minutes so people actually click on the video and watch, because nobody wants to watch trade recap over 10 minutes. So, there you go.